U.S. President Donald Trump has directed federal agencies to draft a comprehensive regulatory framework for digital assets and next-generation financial technologies. The executive order, signed at the White House, aims to streamline how these innovations integrate into existing financial systems. At the heart of the directive is a push to simplify regulatory processes, reduce unnecessary barriers, and foster collaboration between fintech companies, financial institutions, and regulators. The goal is to position the U.S. financial system for the future of digital finance. The order mandates that financial regulators review their current rules within the next 3 months. This review is intended to identify and address regulations that hinder fintech companies from partnering with federal agencies. Within 6 months, regulators will be authorized to introduce measures that promote innovation. This timeline reflects a clear intent to act swiftly in reshaping the regulatory landscape. A key focus of the executive order is the role of the U.S. Federal Reserve. The order instructs the Fed to. Most people arrive after the move is obvious and the easy upside is gone. We focus on serious crypto education and high-quality signals before the crowd rushes in, so you can understand the setup earlier and move sooner. If you want that edge, visit the link below now. Reassess how uninsured deposit institutions and non-bank financial entities gain access to payment accounts. This includes examining whether the 12 regional banks under the Fed can independently grant payment accounts without central oversight. This part of the directive is particularly relevant to special-purpose depository institutions in Wyoming, which may gain a competitive advantage if granted broader access. Earlier this year, the Kansas City branch of the Federal Reserve granted a limited access master account to Kraken, a Wyoming-based digital bank. This move is seen as a test case for broader access and could signal a shift in how fintech institutions engage with the traditional banking system. The executive order appears to be building on such precedents to expand access and reduce bureaucratic hurdles. The directive also emphasizes the importance of cooperation between fintech firms and federal agencies. By encouraging collaboration, the order aims to foster a more inclusive financial ecosystem that supports innovation without compromising stability. This approach could lead to more efficient financial services and greater adoption of digital assets. However, the success of this initiative will depend on how regulators interpret and implement the new framework. There is uncertainty about which specific regulations will be revised and how quickly these changes will take effect. The timeline for regulatory review and implementation is tight, and any delays could impact the pace of innovation. The executive order could also influence how the U.S. competes globally in the digital finance space. By streamlining regulations, most people arrive after the move is obvious and the easy upside is gone. We focus on serious crypto education and high-quality signals before the crowd rushes in, so you can understand the setup earlier and move sooner. If you want that edge, visit the link below now. The U.S. may attract more fintech investment and position itself as a leader in digital asset adoption. This could have broader economic implications, including job creation and technological advancement. The next signal to watch will be the release of the final regulatory framework by federal agencies. This document will outline the specific changes and how they will be implemented. Investors, fintech companies, and financial institutions will be closely monitoring these developments to understand the practical impact on their operations and strategies.